please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But right now, it's time to get a corporate conversation going. Varun Beverages is the stock on our radar this morning. Joining in from the sidelines of the KIE Chasing Growth Conference is Raj Gandhi, Group CFO of the company. Good to have you on the show, Mr. Gandhi. Thanks so much for joining in. Now, if you could start by telling us how carbonated drinks as an industry has been growing and what kind of growth rate is expected.
Look, we have to divide the growth in two parts. One is pre the tax rates going up or pre these weather effects up to 2011, if we need to classify. The growth had been quite substantial, about 15–16%. Post that it got affected. But going forward, looks like 8 to 10% growth in carbonated is quite possible. And to achieve the growth target set by the company for itself, there is a lot of product innovation happening and the portfolio enrichment is happening. If I can give you the few highlights, one is the latest energy drink launched, Sting. The response is coming very good. Last year, zero calories Pepsi Black was launched, which is getting accepted very well. There had been variants of the fruit juices.
All right, great point there. So 8 to 10% growth expected for the industry. So in that case, if we get granular, what is Pepsi's market share there versus Coke right now, and how is that expected to grow going forward?
With the very guesstimate like a situation, I can say Pepsi may be 38% in India. And for the competition with the acquired brands, they have larger share.
Now, sir, we understand that you've acquired a lot of sub-territories and you're looking at getting into new geographies, more brand agreements perhaps coming with Pepsi as well. What will this translate into revenue growth? What can we expect, let's say, in the current calendar year, CY18, both for the, what can we expect, let's say, in the current calendar year, CY18, both for the India business as well as your international operations?
The first answer to your question is that yes, we have acquired 5 sub-territories in the last 6 months, starting from Orissa, MP, Jharkhand, Chhattisgarh, Bihar, which had been contributing about 30 million of cases and to the existing base of 278 million cases. So one direct growth will be coming through this inorganic initiative. Second is in Africa, one new country, Zimbabwe, has been added and the production has already started last week, and that should add to the contribution. And the next is that in Nepal, there are certain areas in the downhill areas where we didn't have our presence, where new plant has been set up and should be operational within maybe a month's time, and that should also add to the revenue. So all these things with the new product range getting added, we expect a good revenue growth for the company.
Good revenue growth for the company, Mr. Gandhi. So last year you did about 4,000 crores in calendar year 17. $1 billion, that's 6,500 crores by when? 2020? Is that a possibility?
Should be earlier.
Earlier, so you mean 2019 itself you can do $1 billion in terms of revenue?
Let's see, let's keep the fingers crossed. There had been 2 aspects for the company for its growth. One is the organic, another is inorganic, and we had been growing pretty fast, and touchwood should continue the same.